Hey guys, it is Julie here with TipRanks. Today we're taking a look at 3 stocks that analysts rate strong buys with some great double-digit upside potential. These stocks also have market caps under $400 million and price points of under $10 per share. So in today's video, we're going to take a look at what each of these companies do and what analysts are predicting for their stock's future. Just before we get into all of that, this is your friendly reminder that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes only. Make sure you are doing your own research and due diligence before making any investment decision. Now, if you enjoyed today's video, please hit that thumbs up button and leave your thoughts in the comments down below. You guys know I always love hearing with you. All right, with that being said, let's get right into these 3 companies. The first stock on our list today is CECO Environmental. They trade under the ticker CECE and are currently priced at $8.35 per share. CECO Environmental deals with air pollution control technology, a niche that has been in demand since the 1970s. They develop, provide, and install air quality and fluid handling systems. They provide the know-how and systems in a wide range of industries, including construction materials like bricks, cement, steel, and glass, and manufacturing in the automotive, aerospace, pharmaceutical, chemical, and fuel refining sectors. They recently announced their first quarter earnings report and boasted a great start to 2021. Their top line came in at $71.9 million, just under the $80.5 million reported in the year-ago quarter, while their earnings per share came in at 3 cents versus 10 cents per share 1 year ago. In a more positive note, though, the company reported a year-over-year increase in bookings from $75.5 million to $92.1 million, and the work backlog of $203.1 million was up 11% from 1 year ago. Just last week, they announced that they were awarded a $3.5 million contract to provide environmental solutions to a global semiconductor chip maker. This large-scale project is to provide over a dozen CECO heat dual scrubber and exhaust systems, as well as CECO Fibrock recirculation pumps. The technology will be used to help a leading global semiconductor chip manufacturer meet or exceed safety and environmental requirements for a major new plant project by removing harmful gaseous contaminants. The CECO Environmental stock has 3 current analyst ratings, and as I mentioned at the beginning of today's video, all of our stocks today come in as strong buys. The average price target for CECO is $12 per share, which would be a 43% potential upside from current prices, and all of those price targets come in from in the last 10 days. And our highest price target comes from 5-star analyst Amit Dayal from H.C. Wainwright. He believes the company has a lot going for it and a bright future, saying that the company appears to be in recovery from pandemic headwinds, with bookings growing to $92.1 million during the quarter. The last time bookings were at or above these levels was during mid-2019. During the next few quarters, we expect to see improved revenues from engineered systems as broader energy markets improve. Management highlighted that the company's bid proposal environment has been improving, with order pipeline over $2 billion, which we believe should support continuing order improvement over the next few quarters. His price target of $15 for the stock would mean an upside potential of nearly 80%. The second company on our list today is PowerFleet Incorporated. They trade under the ticker PWFL and are currently at $7.43 per share. PowerFleet applies IoT or Internet of Things and M2M tech or machine-to-machine tech to the security, control, tracking, and management of high-end assets, including tractor-trailers, containers, industrial trucks, cargo, vehicle, and truck fleets. PowerFleet provides a complete technology suite that delivers telematics, asset tracking, freight visibility, and driver behavior. Their solutions include an FMCSA-compliant ELD system, trailer container chassis GPS tracking, automated driver workflow, refrigeration command and control, cargo visibility and status, driver navigational assistance, and robust fleet management. Their two-way refrigerated solution integrates into Thermo King and Carrier, and their suite of tracking devices include wireless sensors, photographic cargo imaging, and environmental status. They operate in 5 different continents with over 590,000 monthly subscription units. In 2020, they saw high margin recurring revenues of $67 million and overall revenue of $113 million. And some of the over 8,000 companies that have chosen their combined solutions include some pretty big names. As you can see here, we have Nestle, Brinks, Coca-Cola, Ford, Walmart, Kraft, the list goes on. PowerFleet also recently shared their latest Q1 earnings report, and it was fairly consistent with the previous quarter and included an improvement in earnings. At the top line, the reported revenue of $29 million was only 1.3% off of their Q4 results. The 9-cent earnings per share loss reported was a 25% improvement from the 12-cent loss reported in the previous quarter. Year over year, their earnings per share improved by 40%. Earlier this month, they announced 2 new contracts as well. One of them is a 4-year contract with the Israeli police, and the second is a smaller contract with Alabama-based White Oak Transportation. Looking to the analysts, the PowerFleet stock currently has 4 analyst ratings, coming in as a strong buy with an average price target of $11.13, which would be a 49% upside potential. And on the high end of those price targets, we have Michael Walkley, a 5-star analyst from Canaccord. He says with over 600,000 subscribers, PowerFleet has the scale and international footprint to compete for global tenders against leading fleet and asset tracking competitors. For fleet management, PowerFleet is one of the only true end-to-end solutions in the market spanning in-cab, refrigerated trailers, dry vans, and containers. We believe PowerFleet has a strong product portfolio and a leading solutions platform to grow its market share. This strength is demonstrated by its expansive global customer base. We believe PowerFleet has the leadership team in place to execute on its growth strategy and anticipate recovering sales and expanding margins as global economies recover. His price target of $12 per share would be a 61% upside potential from current prices. And third on our list today is AXTI Incorporated. Trading under the ticker AXTI, they're currently priced at $9.43 per share. AXTI is a material science company that inhabits the supply chain for the semiconductor industry. AXTI develops and manufactures the high-performance rare metal substrate wafers necessary in the construction of semiconductor chips and optoelectronic devices. They have operations in both California and China, staying close to Silicon Valley customers and Chinese raw materials. The company holds a vital niche in the chip industry, and their revenues and earnings have reflected that. In their first quarter of 2021, revenue hit $31.4 million, passing the $30 million mark for the first time on 51% year-over-year growth. Their earnings per share hit 8 cents, which is a dramatic turnaround from the 1-cent loss reported in the year-ago quarter. Along with their Q1 results, AXT also announced its first deliveries of 8-inch diameter gallium arsenide substrates to a major customer. AXT has received significant interest from potential customers of these GaAs products and predicts increasing demand as the products find more applications. The AXT Incorporated stock currently has 4 analyst ratings, and the average price target of $16 per share would be an impressive upside potential of nearly 70%. On the high end of that, we have BWS Financial with a $20 price target, which would be a 112% upside potential. But more recently, we heard from analyst Richard Shannon from Craig-Hallum. And he says that the demand profile from INP, including optics and health monitoring, and GaAs, including 5G, optics, 3DS, and micro LED, are as powerful as any we can find across small cap tech. With an improving customer set, GM that can still grow, and valuation improvement potential from a Star Exchange listing in mid-2022, investors have multiple ways to win in this stock. His price target of $17 per share would be an upside potential of 80%. So there you have our 3 strong buy stocks, all under $10 and all with some great double-digit upside potential. As I said before, guys, I always love hearing from you. So make sure to let me know your thoughts on these 3 companies. What one stood out the most for you? And what other stocks under $10 are you loving lately? If you made it all the way to the end of today's video, make sure you hit that thumbs up button and check back in tomorrow morning for our pre-market morning update. Thank you guys so much for watching, and we will see you back here next time.